Yes.
When the red light's on. You don't have to hold it down, just hit the button.
Oh, okay.
You're live.
All right, good. This is our regular monthly meeting, and we're starting a little later than usual because we had an executive session to meet with the auditing firm and the audit work group. And that went very well, and we're excited about seeing the complete set of financials and the CAFR, as it's called. But we'd like to call this meeting to order. We have an aggressive agenda. So let's see, do we want to deal with that issue right now, the resolution, or? But yes. So, yes, we need a motion, right?
Yeah, you would need a motion in a second.
Okay, so as chair of the subgroup dealing with the audit, I would like to make the following motion. This will be the motion that will be presented to the Board of Commissioners on Monday, this coming Monday evening. And based upon the history, we function as an audit committee for the township, but the commissioners still have the ultimate responsibility of having to accept the auditor's independent report and the financial statements as prepared by management. We have reviewed everything with management, with the accounting firm, to let everybody know it is what we call an unqualified opinion, also commonly referred to as a clean opinion. So the resolution will be that the township engage Zelenkowski Axelrod LLC, the auditors, to perform the annual financial audit pursuant to the township's homeroom charter number 7.13 for the year ended December 31st, 2016. Whereas the township management bears the sole responsibility for the completeness and accuracy of the 2016 financial statements, and whereas Zelenkowski Axelrod, in its capacity as the township's independent CPA firm, is responsible for expressing an opinion on the financial statements as prepared by management, and they are also responsible for issuing an opinion based upon the results of their audit of the township as summarized in the independent auditor's report. And whereas the Carfax Group, which is comprised of 9 volunteer residents as appointed by the Board of Commissioners, was involved in the audit process by overseeing the project schedules and timelines, discussing internal control deficiencies, if any, resolutions from prior year audit results with management and the auditors, and by meeting independently with representatives of the auditors to review possible audit findings, including but not limited to those specifically addressed in what we call SAS 115 letter to management prepared by the auditors. And whereas Carfax accepts no responsibility and takes no position on the completeness or accuracy of either the independent auditor's report or the audited financial statements, and this is the last whereas exclusively based on the foregoing, Carfax is recommending that the Board of Commissioners adopt a resolution which will be presented to them, this resolution, this Monday evening, to accept the independent auditor's report and management's 2016 audited financial statements. Now, therefore, it is resolved that the Board of Commissioners formally will accept the independent auditor's report and the audited financial statements as prepared by management, both of which are included in the 2016 what we call CAFR, the Comprehensive Annual Financial Report. Do I have a second for that?
Second.
There any questions, any discussion? Any questions from the audience? And by the way, the partner on the engagement is here this evening in the event that there are questions. Hearing none.
Call for question. All in favor?
Aye.
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 No one's not in favor. So
Unanimous. Thank you.
motion passes.
Okay. I will also state that the management letter, we have not seen the final version, but as I understand it, it will have only one comment. We're down to that, and that's dealing with the fixed asset system, which is actually in process as we speak to have that system automated. So there'll be a further discussion about this and a chart Monday evening for those who are able to attend or later on able to see it on local television. And we've come a long way. And that's it.
Again, I would like to acknowledge and thank the auditing team from ZA, and also Ed and Carl, and also Bill and Bob, leading the administration team, managing this project so cleanly and so efficiently and so on time and within budget. It's well done. Perhaps our most important promise to the community, that the financial statements be representative of the actual situation, and this is about as good as it gets. So, thank you. Okay, you all received the minutes.
I'm Mr.
sorry.
Chairman, if I could, just real quickly.
Yes.
I'd like to also give a brief thank you to Carfax, specifically Ed and Carl, for your help in helping us shepherd this project through for yet another year. I know Carfax is aware, but for the larger audience, so that they're aware that Bob Tate, who is our Assistant Finance Director and HR Manager, this is his project to lead, and he does a fantastic job at making sure that this gets done. On top of some added duties this year, and again, I know this is a little bit off topic, but just for the larger audience, we did an entire healthcare changeover for all the employees, all the non-uniform employees of the township, as part of the new collective bargaining agreement. That happened at the beginning of June. So all the prep work was happening at the same time as this audit. Our Act 511 taxes are due May 15th. Basically the entire spring season, late winter and spring, is not just managing this project and the healthcare rollover or changeover, but it's also administering the taxes that are paid, which include a few dozen folks, business owners coming in and providing one-on-one service. So Bob Tate deserves a great deal of credit, and thanks for his leadership on this project as well. Thank you.
Thank you very much, Bob. Did you want to say something?
If I may, we couldn't do this without the support and guidance of the leadership here in the township. Without your support and the audit work group in particular, with their involvement. And we have a great staff and a great team of people in our department that help pull all this together. So certainly a lot of people are involved in this, and I'd like to acknowledge that it really is a group effort. But we have the leadership and the support to get it done. So thank you.
If I may, I would like to also, again, I did do this in executive session, and I apologize for not doing it publicly, but I do want to thank Bill. I want to thank Bob. It was yo person's work that they did, and they did a great job. I sit on other audit committees for other organizations. It was a super job. And for those who do not know, the financial statements are 118 pages in length. This is no small task. Thank you.
Any other comments before we move on? Okay, then. All right, were there any comments or corrections on the minutes that were emailed to you?
Yeah, I did have one thing on the first page under 2B with the capital long-term liability. It mentions presenting a series of slides focusing on Radnor's unfunded pension liabilities, and it also mentions OPEB. So I think OPEB shouldn't be there. This is just related to pensions.
Okay,
So
so that's
just-
in the second line, Jerry?
Yeah, in the second line, just strike out and other post-employment benefits.
Okay.
And then just on the later on in that paragraph, it talks a little bit about the next steps, and I don't know if that's exactly right, but I think we don't know the answer yet, which we'll find out when we get to that part of it. So I think I don't think we need to change the minutes, but just so we know that some that's not exactly right in terms of next steps.
Okay,
But we'll get that clarified in the minutes for this meeting.
good. Any other changes? All right, then I guess I need a motion to accept the minutes as amended.
So moved.
Okay.
Second.
All in favor? Aye.
Aye.
Okay. Thank you. Good. Thanks, Jerry. All right. Okay, we are now in June, and we have a few more months, and then the holidays will be here, so I'm going to take some time and just look at the calendar, which was also included here, the team calendar, and establish the dates of our next televised meetings and the topics if we know them. Just kind of get it on here so we can plan around that. And any other critical dates. One date that has come to mind is for whatever the ultimate nature of the presentation to the Board of Commissioners, Jerry. I spoke with Elaine about that, and she is checking with her fellow commissioners as to whether July 10 would be a good time for that to take place. And that seemed to be within the timeline that we had talked about. But you're driving the project.
Right, right. So that, the July 10th is not really a CARFAC meeting. That's one of the special Board of Commissioners meetings.
Yes.
So, Bill, actually, a question for you. So, at our last meeting, we have a pretty solid draft of what we want to present for our work for pensions. So the question was when to present it. At the time of our last meeting, the Board of Commissioners had not yet set the special meeting dates, which they did. So there's one in July, one in September. So the question is, which one of those two is going to cover the pension topic, or which one of the two would be appropriate for us to present, if indeed it is one of those two, and then how it might fold in with other presentations beyond ours about the pensions topic. So I don't know if that's answerable now or to get back to us, but.
Well, let me get back, let me be definitive and get back. My recollection of the board's conversation on that was that I think initially it was proposed that there'd be 4 meetings, each one with a special topic, being that there are 4 topics that needed to be covered.
Right.
The board elected to move forward with 2 dates, and they were going to combine 2 topics into each meeting. But I think that the conversation was specific enough that they didn't identify exactly which topics to cover at which ones, which leads it open to recommendation. So I will check with the township manager and the board to see if they are open to doing the pension conversation on the 10th.
Okay. And then, and then I guess it, also tying it in if Mock and Hop's going to be coming in at some point, PFM, if that'll be on the 10th or that'll be in September, and if it makes sense for us to dovetail with that, or maybe that's not necessarily the case, but I think we can make either work.
If you could write the script, would it be most beneficial to have PFM and Mock and Hop here?
I think it would be best if we went together.
Yeah.
But I think it can, as far as I know, maybe you're just, have your comment. I think September would be okay, if
Okay.
that's what would work.
But, how about I reach out and see if they're available on the 10th? If not, we'll have them back then in September to tie up the loose ends before we head into the budget season and the MMO season. Does that sound good?
Yeah, I mean, it's not just availability, but they may need some time to prepare as well, so the 10th isn't too far off.
Yeah, well, no doubt. This is as we know, this is a topic we've been having pretty continuously for the last few years, so I would imagine that they are prepared. And it's actually a carryover project from last year when we were prepared to have the discussion, so we'll just ask them to update whatever they had ready to go at the end of last year, and hopefully they can have that ready if they're available on the 10th.
Okay.
But we'll make the ask, and,
Right.
and hopefully they can help us out.
Okay, and then, from our perspective, I guess either date would work for us, so
Okay.
we just need to know.
Yes, sir.
Okay, thanks. Okay. So, yeah, so it's not going to be a separate CARFAC date, it'll fall into one of the special BOC meetings.
Yes,
Yeah,
and the
request.
2 dates that are under consideration for that are,
July 10th and September 18th.
okay. And if that education, that's the education kind of conversation with them, right? To bring all the issues to bear?
Well, it's a presentation of it's basically the presentation we were asked to put together, which was a comparative analysis.
Right.
I don't know if I'd characterize it as education, but it's,
Okay.
a presentation of what they asked us to do in one of our tasks for this year.
Right. That was the presentation we ran through,
An early draft of it, right?
right?
Yep.
Right. But we're going to include these other parties as well. Is that accurate? Where did they fit in?
Yeah, well, not we CARFAC, but that's part of what administration is putting together for these special meetings.
Okay. All right. And if we do it in September, they'll still have time to make a resolution or whatever? I don't want to miss any critical
Right.
dates.
I believe so, but yeah. Bill?
Yeah, so this came up earlier this year in one of our working group meetings on this. We had asked Mockenhop, who prepares our actuarial reports, how much time they needed from board decision to being able to produce the updated actuarial valuation. And their response was a couple of weeks. So even in mid-September, we might not have the data we need for the resolution that's required by the end of September, the initial MMO resolution that is required to go to the state by the end of September, but we would have it in time to be able to amend that resolution either in October or November as part of the final budget adoption. So that is a very long way of saying, yes, we can make it fit.
Okay, great. I just don't want to have any train wrecks because we,
Yeah, and it's not unusual to adopt an initial MMO and then have it revised. We've done that in the past because either payroll assumptions have changed during the budget process or we got updated actuarial numbers that we wanted to incorporate. So it's not unusual to adopt the initial MMO in late September and then adopt a revised one as part of the final budget document.
okay, thank you for that clarification. Okay, in terms of the other meetings that we would like to televise this year, in terms of the schedule and the topics, what suggestions do you have?
Well, my understanding of the resolution the Board of Commissioners passed is that it wasn't just any 4 meetings, it was the 4 quarterly meetings that we need to televise. So we're mandated to have 4 quarterly meetings.
Okay,
We can certainly have meetings beyond it, but it was those that were televised, that would be televised.
okay. So we're doing the first quarter review and the CAFR now. So that would suggest, well, September or October. September is really before. I mean, what's the natural flow of that? That's what I'm
Yeah,
wrestling with.
well, it would be, I think it would be a month after the end of a quarter.
Okay,
So it would have actually been, July would be, rather than June, it would have been July. So I guess, we can either pick up that one or we can wait till October.
okay. Well, will the second quarter results be available for the July meeting?
Yes, well, and that's part of what we had discussed during our last televised meeting,
Okay,
is that we would align the televised meetings with the end of the quarters so that the quarterly reports can be given. It may just be that, I think under a normal cadence, the audit is going to be wrapping up in June of every year, so it just might be that in addition to the 4 quarterlies, there's an extra one for the audit, because that will typically be June. So it might just be that June and July are both televised, so long as CARFAC wants to have the audit presentation also be televised. So you can have 5, you could have 6, you could have 12, but
okay, well, we're playing catch-up
sure.
in terms of these quarterly things, but that is a nice natural flow, so great. Are there any other calendar items that we should note here, just from planning purposes, or because certain things take place in a series, not in parallel?
The one comment I want to make, though, about the quarterly meetings where we're going to review results is that information is, and maybe it's the CPA in me, but that information is unaudited. So if the community looking at those quarterly results, and then was to take that information and try to compare it to fiscal year-end reports, very likely there will be differences. And as long as the community understands that, that's what's important.
Thank you. That's an excellent point. With that in mind, I still, in my personal opinion, think that looking at them quarterly as requested will be helpful to us in understanding what's going on and also to the community. So, yeah, that is a very valid concern, though.
No, I'm in full agreement with that, and I agree with you. I think it is. I think from a transparency viewpoint, we're supplying the information, and the community's entitled to that. So I don't see that as an issue. Just again, though, as long as everybody does understand it, it is unaudited. We should make that clear at any of those meetings. The information is unaudited, and it could be different than what it will be once the year-end financials are prepared, analyzed, and fully in conformity with generally accepted accounting principles.
Yes, I would think that the likelihood that there be changes, at least small ones, would be 100%. Just the nature of the process, but, okay, thank you. Okay, so then the next topic is capital and long-term liability. Jerry, do you have an update for us?
Right. Nothing further than we just discussed, so the key thing was is getting our presentation scheduled.
Okay. And Bill, you are going to drive that scheduling
I'm sorry, I was,
in terms of scheduling the meeting we had just discussed?
Yes.
You're going to be responsible for that?
Yep.
Let us know. Okay, great. Software implementation. Jerry, you're in charge of that. What's going on?
Right. Well, implementation time is here. So I guess the official date is, I guess, July 1st, but I guess it's with the holiday, it's a few days after that, but it's actually, I mean, it actually doesn't happen on a particular day, and they've actually started the process of closing off transactions, the old system, and striking balances and bringing that in the new system. So from what I understand, everything's on target. There's been end user training has taken place. My understanding is that the vendor, Tyler, is on site today and tomorrow, I believe, for any final checks, and everything looks ready to go. Certainly expect some things to come up. There's certainly some tuning and things that happen along the way, but my understanding is everything is set to go. And again, this is the first phase. This is the financials, and then payroll is not far behind. The payroll phase has kicked off, and that implementation is at the end of the calendar year. So there's actually two different modules going on at the same time right now. But Bill or Bob, I don't know if you want to fill in any more details or any further commentary about the project.
yeah, that's an excellent summary of where we are. July 3rd is the actual date when we walk into this building on July 3rd, where instead of logging into the old system, we'll be logging into Tyler, and all the transactions will start flowing through. The only other thing I would add is you discussed the phasing, that this is phase one. Phase two is the payroll that we are currently working on as well, and there are 5 total phases. So we're just getting started with the whole project. So we're still a long way, even after we go live with the GL side, we're still a long way away from having this the entire ERP up and running, at least another year and a half as scheduled. And that's assuming everything stays on schedule, which, except for a couple bumps in the road, mostly dealing with printing and forms. So it's funny, whenever you talk to folks about IT projects, printing and forms usually are on the list of things that did not go as smoothly as everyone had hoped, and that was the case for us, but I think we've got it all worked out. And I would, if I had to describe the staff's feeling right now, I think everyone's excited and anxious and a little bit nervous. Just, we think we're ready, but until you're in the middle of it, you're just not sure. But we've followed the protocols that Tyler laid out for us. So we think that we're as prepared as we're going to be. And they are on site today and tomorrow. They're actually going to be on site a couple days next week as well, and then they're coming back the end of the second week in July. So we'll have about a week under our belts with live information, and then they come back just to make sure that there's any loose ends that are tied up. So it'll be a very exciting and interesting time over the next month.
Well, two things. One, I'm surprised that you don't want one of their people there to hold your hand when you pull the switch, so to speak. And having been involved in some of the teamwork here in terms of steering committee, I know it's being very well managed. If you do encounter any problems or difficulties, will that impact the operation of the township, or how would you handle that?
Well, depending on the severity of the issue, depending on that, will determine how we need to react. If it is severe enough where it will impact the data or the security or integrity of the data itself, Tyler's support team is it's part of what we paid for, and we've submitted probably 24 tickets already on various issues that have come up during training, and they have been responsive. So if it's that critical of an issue, there's a phased or a tiering alarm system that we can fire if we're in trouble, and they will respond. The other benefit, and I know you guys are aware, the project manager from the Tyler end lives literally on the other side of the border in Tredyffrin. So she is very accessible in the case that we need to call her in. And she has offered that to us. But quite honestly, and the staff deserve a lot of credit, they want to do this. They've been training for it for the last 13 months. So I think they want to do it on their own and see how they do, which is why we pushed back Tyler coming back into our offices for a week after we go live, so that when we anticipate bumps in the road, but we want to, the finance staff wants to be able to try to problem solve themselves first before we have to jump back to Tyler to have them help. So if it's a processing problem, those are things that we'll want to solve ourselves because we own it. If it's a data or system problem, then we have no problem calling Tyler up, and we feel very confident that they'll jump when we need them.
Thank you. The other question that I had was, this is the initial phase, and there's 4 more phases. Now we've gotten a taste of the demand on the administration to go through this process and run the township. And it sounds, from my perspective, everything's going very well. And people have worked a lot of long hours. But in terms of the other phases, do you expect the same level of challenge or any kind of a gradient there?
Yeah, I would anticipate the same level of intensity for each of the phases. Now, with regard to payroll, that intensity is still going to be on the finance department for the most part, because finance is responsible for, at the end of the day, processing all of that. There'll be some end user training on which buttons to press and account codes and how to work it, but the payroll has been just as intense as the GL, the phase 1 stuff. The nice thing with the other phases, as we start getting into those, is that the demand will spread to other areas of the township. So there might be a heavier load on the external departments, the other township departments, external to finance. So in terms of the finance staff, they might get a little reprieve. just because the other departments are going to be more intensely involved. An example is when we start doing the codes and permitting module, the community development department is going to be running that implementation, and finance will be mostly on the sideline, just help shepherding it through. Same with recreation, the work order system on the public works side, those departments will be more involved. So the intensity of each phase I anticipate being the same. It's just that when we get to some of those satellite or the external parts of the ERP system, other folks will be able to step in and help out.
Thank you. And just from the citizens' perspective, all of this is going on behind the scenes, quietly, transparently. When will this actually show up as new capabilities for citizens to tap into the township to pay bills or whatever that functionality is? Is that when it's totally, completely installed?
Yes, yeah. So we're still a ways away from that. We'll get into the customer self-service. I can't remember if it's phase 4, but it's 2008, late 2018 at the earliest. They'll start seeing reporting coming out of the system as soon as the end of July. But in terms of citizen self-service and being able to access it and start take advantage of the capabilities that it has, it'll still take some time.
Okay, thank you. Any other questions on this topic? All right, thank you very much. Pilot review is next. Mr. Antonopoulos is unable to join us this evening. I'm on that work group, and there's been no activity on that. Just in terms of recalling the last conversation that we had on that, we're convinced that from a legal standpoint, it's rather pointless to devote further energy there. So there didn't seem to be much opportunity to do something meaningful and useful to the board. Any other perspective on that? No? Okay. So, and then stakeholders report and financial metric development. That's Mary, who is over here. Okay, thank you.
So with respect to the financial metric development, basically I've completed all the analysis. I sent the information to Bill as well as to copy to you. We're looking at 6 townships: Radnor, Lower Merion, Tredyffrin, Easton, Haverford, and Williston. And we looked at years 13, 14, and 15. And there's probably about 12 to 15 metrics that I compiled, but each of the years. So it's a fairly extensive report. And so I sent that. I have the comparisons for each of the town, each of the years, for each of the metrics. And then I think we have a meeting scheduled on July 14th to really just take a look at these metrics to see which ones we think would be the ones that would be the most useful to present to the Board of Commissioners. I did also supply him with some commentary on each of the metrics and what I thought that it meant. But I think it's probably, we probably should go over that first before we then take the report and present it to you guys as well as to the Board of Commissioners. But really, the work is all done. It's really just a matter of selecting the metrics and deciding which ones we think would be the most useful for the board, and also whether or not we should start including some of these metrics in the stakeholders report. So that's where we are on that. So I think within 1 hour, that'll be complete. Yes?
I'm sorry. Just for context, what is the point of creating these new metrics, just for the people?
Oh, sure. So I think the idea of creating these metrics was to really see how our township stands relative to other townships with respect to the amount of debt that we have, the amount of expenses that we have, things like our accounts receivable, is it turning over quickly? How efficient is the township with the way that there's efficiency metrics? How efficient are we in terms of taking in revenue and expending it, relative to the other townships? So those are the types of metrics that we're looking at. Our current assets versus our current liabilities. There's information on the pension obligation, our obligation, where we stand vis-a-vis other townships. So just the critical financial metrics that you would see in a township on their income statement or on their balance sheet. Does that answer your question?
Yes. And so from the board standpoint and the public standpoint and the stakeholders, this represents a set of new vantage points from which to try to understand how our township is doing and a little more context as to how it compares to other townships in
Right.
the area.
That is correct.
So, good,
Yeah.
yes.
With respect to the stakeholders report, now that the financial metrics have been finalized, have been developed, we've put it together, Bill and I are going to work on the stakeholders report to get the information together. That's my second project. So I planned on finishing this in June. I think I met my deadline now. I'll undertake to work on the stakeholders report. And I think now that the audited financial statements have been finalized, it certainly makes it a lot easier to put that report together because we have the information that we need to populate that. So, hopefully we'll have that done in the next couple of months as well. Thank you.
Thank you, Mary. Any questions for Mary on that? Okay, great. Definitely a step forward in terms of understanding the township. Credit rating, that's Carl.
Yes. So the project is making good pace. To bring everyone up to speed, the Board of Commissioners had approved utilizing the services of PFM. PFM has done a detailed analysis. They've provided that analysis to us. We came back, excuse me, came back to them with some questions and some insights as to how they did their analysis, and we are in the process of scheduling the follow-up meeting for them to present the secondary results. Hopefully that'll happen in the next few weeks, and we'll be able to take that project across the finish line.
And the end result hoped for as a result of these efforts is?
The primary goal here is to get a better insight into the steps needed and potential cost involved of moving our township up one ranking to the highest credit rate and ranking that's available. In conjunction with that, what are the benefits that we may see, both financially and for our residents and for our employees from doing so? And I think the third part, which also should be discussed, is if you are moved up, what is the potential cost of being knocked back down in the future if that ever were to occur? Would you actually find yourself in a worse borrowing position than where we are now because of a potential downgrade? So through a series of comparisons with other townships, as well as looking at the various metrics that the rating agencies utilize, PFM is laying out answers to really those questions. What steps are needed to move us forward? And if we were at that higher level, would there be a benefit at all? And it should be noted that we're not looking at it in conjunction with where the current interest rate market is, where yields are very tight. We're looking at it over a longer run, more normalized yield curve where there actually could be some spread between different ratings.
Thank you very much. Any other comments or questions on that topic? Okay. Well, that completes our project updates. So at this point, Assistant Finance Director Bob Tate is going to review what happened in the township's finances in the first quarter of 2017.
I'm actually going to pull rank, and I'll go ahead and give the presentation on Bob's stead. I apologize. That was a carryover from the last month's meeting where he was here in my absence. So when we drafted the agenda, I should have fixed that and just said the finance director. So I will go ahead and give that. While the projectors are warming up, I will note that given the timing of the presentation and the fact that it was coming out, we had planned on it for last month, we had added April. So we're calling it the first quarter results, but it's actually January through April of 17. So we got the first 4 months in. And this was the same presentation that was given to the commissioners in, gosh, was it May? I apologize, I've lost track. In terms of the room layout, that projector, the bulb at the last meeting died on us in the middle of the meeting. So it's currently in repair. The agenda of the presentation, I'll touch on the general fund, January through April as noted. We'll also take a look at how things look potentially for the full year based on how we did on the first 4 months. And then as we've done, we'll take a look at the revenues from both the sanitary and stormwater funds, and then also look at our pension asset performance. The general fund in summary, on the revenue side, real estate collections were strong as they typically have been. The Act 511 revenue numbers at the time were doing well against their, the comparison is this, at the same point in prior years. However, with the due date not until May 15th, we always qualified that's early. And until you get through May 15th, we're still not sure. The permitting revenue was extremely strong. We predicted that. We knew that it was coming, and it materialized as anticipated. I'm referring to the financial forecast that we have in our budget. For 2017, we had included a large lump sum payment from the Villanova project that was realized in January. We have some mixed results on the department revenue side, but on the aggregate, that group was doing okay. On the expenses.
Excuse me, Bill?
Yes, sir.
I'm sorry. Before we get involved in all the details, could I ask you, what was your overall take on the first quarter or first 4 months? Was it a good quarter? Was it within budget, as expected? What's kind of the overall sense that you had when you were looking at the numbers?
Yeah, the overall sense was neutral. It was as anticipated. Nothing extreme either way.
Okay.
So it was kind of boring, which is okay. And I say that because typically by the end of the first quarter, at least over the last few years, we'd either had a blizzard or two, or Villanova would go to the Final Four, and we'd have a bunch of overtime for some sort of emergency management situation that would work its way into our budget presentation. We didn't have any of that in the first quarter, or the first 4 months of the year. On the expense side, again, things were on target, either at or slightly under budget in the major areas. Getting into a little bit more detail, this is specific, well, this is general fund revenues in numbers instead of in words. You could see that at this point in the year, we would hope to have collected roughly half of the full year revenue, and we're actually sitting at 56%. That $1.9 million variance, again, $1 million of that was from the anticipated development revenue from Villanova, and the other was a large BPT audit settlement that was settled in December of 2016. We realized half in that year, the other half in January of this year. And actually, to circle back around on the comments by Mr. Kane earlier, these numbers are presented on a unaudited cash basis, which is a different reporting type than our audited financial statements, which are on a full accrual and modified accrual, and are over the term of a full fiscal year for the township, which is a calendar year. These numbers here are cash basis and unaudited. So based on the numbers as they existed at the end of April, we felt like they were still on target. I wanted to highlight again that real estate taxes weren't due until the end of May, and the business taxes, the filing date on those are May 15th. On the expense side, again,
Bill?
Yes,
Sorry,
sir.
back on the revenue. So do you have any update on BPT, being the dates passed?
I knew that question was coming, and I am sorry to say that I have not had a chance to go into the numbers. And normally that would not be the case, but we've been so busy working on the implementation that I've actually spent more time looking at 2015 and 16 numbers trying to get those into the new system that I'm a little behind on where we're at with 2017. But it is definitely something that's pressing. So if the committee will permit me, I'll put together a quick summary and email that out to everyone tomorrow, because it's definitely something that we need to know. Because
Okay.
at roughly 14 million out of the total 34, it's a significant part of our revenue. We need to see where that's at.
Yeah, and then the other question on the one-time permitting revenues, is that it for the year for that project, or do you anticipate any other large ones like that?
There should be one more payment yet this year.
Of that magnitude, or?
No, about a quarter of what we got. So 1.25 million is what we estimated
For the year?
for the full year. And the other quarter, the other 200 to 250,000 is anticipated. It's just a matter of timing
Okay.
and when they get to that point of the project.
And then something, I guess this made me think of something I've never actually nailed down in my own mind. So I know there's funds for development that go into an escrow account. Is that different than these? Or-
Yes.
Okay.
Entirely different. But a very good question nonetheless, because the activity itself flows through the general fund. In 1 minute, we could spend weeks discussing the topic, because it can be very complex. But in 1 minute, basically what happens is, if you're a developer and you have a land development project of any magnitude, you're going to be required by the township to put up escrow funds. And you have different options in how you want to put that money up. You can put cash, letter of credit, bonds, different, depending on, we leave that up to the developer. And those funds are utilized then by the township for the professional services needed to get the plans through the approval process. So the engineering reviews, the plan reviews, the legal reviews, and then ultimately, as the project proceeds, the inspections that occur during the actual construction project. So funds are put up in escrow, and then the township, in almost every case, we're utilizing third-party companies to provide those services. So we have direct invoicing from the third-party companies that then hit those escrow accounts. So when the money comes in, we're recognizing the revenue in the general fund, and as we expend the money, as we pay the third-party companies in the engineering department, there's a dedicated object line in that department for this activity. You can see the expenses made. As we pay the bills to the third-party company, we're going back to either the cash or line of credit and drawing down on those balances to reimburse the township. And that happens ideally over a 30-day period. There is some lag time. The professionals themselves don't bill us until 30 days after the service in most cases. And then there's a couple more weeks on top of that for us to process the paperwork on our end. But the cash and the assets associated with escrow are not included in the township books. It's just the activity. But we have a dedicated escrow bank account with our depository bank. That account is segregated into specific project numbers that carry its own unique balance. Those balances are reconciled as part of our monthly reconciliation process, so we always know exactly how much is in each project. It's just not on the township's governmental accounting books.
And then if there's any funds left over at the end of the project, does that get returned to the developer? Or?
Yes.
And
Yes.
likewise, if it's insufficient, then some further escrow deposit, I guess, is made.
Yeah, as the funds become, as they get to a threshold, a letter is sent out to the developer asking them to replenish. And at the outset of the engagement, there's a escrow contract that's entered into with the township that gives us the ability to stop the project if those funds are diminished and not replenished.
Okay. But that's totally separate
Totally separate.
revenues to the township
I mean,
than this permit.
The assets are held separately. The activity flows through the general fund. We recognize it as a cost of our engineering department because those professionals are hired by the township. We're sending them out, so we're recognizing the expense. So we also recognize the reimbursement from the escrow funds. So the operating part of it does flow through our general fund operating statement.
Okay, thanks.
I just have a clarification there. So the revenues that are escrowed, money that's escrowed, that doesn't hit the general fund or anything. And
The
then
revenues do.
The revenues do, well, the escrow funds that are
Okay,
then paid
yeah, I'm sorry.
out to vendors who provide services, that's a complete wash, right? That's
Yes.
just like you're just holding onto the money, paying it out, and so on. But
Yes.
to the extent that township staff provide some of those services, then that would show up on the income statement of the township.
Yes, so there are times when we send out we have one engineering inspector on staff. And obviously, the magnitude of projects throughout town would require several full-time staff members, so that's why we use third-party companies. So on escrow-related projects, primarily, we're using third-party inspection services. There are times when we'll send out our inspector if it's pressing, if the third-party company isn't available and the developer needs to keep things moving, we'll do that. In those cases, within our fee schedule, we have an hourly rate established, and we will bill that escrow the hourly rate. So you lose the direct match between the contracted expense object line in the engineering department because we're reimbursing for payroll. But that's more the exception than it is the rule. In cases where what our inspector is doing is more on the smaller end of the development side, like smaller grading permits that do not require escrow. In those cases, those are mostly homeowners because they're putting in a pool or a deck or whatever it may be. They have to pay a flat grading permit fee. So it's not a dollar-for-dollar match. It's you pay $130, and we may spend a half hour inspecting it, which will come out to maybe slightly less than that. Or sometimes we may, in staff time, spend a little bit more than what we collect in the permit, but on the aggregate, it's a wash. But in those cases, we do lose the dollar-for-dollar match.
Thank you.
Sure. Those are good questions. So on the expense side, expenses, being that payroll and related costs are the primary or the biggest portion of our expense, you'll see that the targets align a little bit more with a calendar year. So at the end of April, we would have expected to spend 25%. And indeed we did, actually a little bit more than that. And the notes being that contracted engineering is over estimate. So, we talk about escrow. That second bullet point under the key points is we had actually fallen behind on paying the contracted engineer for work done in 2016. It was a situation where invoices were either being disputed or questioned and held up for a long period of time. And ultimately, we squared up and processed those in January and paid them over January and February. So we had a large one-time expenditure, and we've been spending the last few months going on the escrow side, collecting the reimbursements on those payments. But it did cause a blip in the expenses for that particular line item. Everything else appears or was tracking at the time on target. So in terms of cash flow for the general fund, the line graph demonstrates the blue line, what we would estimate the cash flow to be for the year. You can see the orange line is trending above And that is a result of the positive variance on the revenue side from the permits in the Act 511 taxes, as discussed earlier. I won't spend a lot of time on this particular slide. This is just a summary of the real estate specific revenue. We collect almost all of that by the end of April, because that is the end of the discount period, the state mandated discount period. So just about every property taxpayer pays it within the discount period. And then we have everyone else paying by the end of May. There's a statistical section in the back of the CAFR that we calculate our collection percentages for real estate taxes over the years, and it's close to 99 or greater % every year. So this is a revenue stream that is very predictable. In terms of economic health, this is an indicator of a community that is financially sound, being that the real estate taxes are so predictable. And in fact, going back to 2008 and 9, when the recession hit, the real estate taxes barely blipped off of that collection rate, which was pretty remarkable. And the business taxes were another discussion or another topic, but the real estate taxes were strong. On the business tax side, or the Act 511 taxes, the BPT was ahead, and as noted, there was a large audit settlement payment that came in January. And then the real estate transfer tax, which is not a business-related tax, but it's a revenue based on all the transactions of real estate, that was doing better than anticipated as well. But we'll always qualify that until you get through May 15th, it's always early. The third bucket of revenue is the all other, which consists of the departmental earnings as well as interest and any kind of grants that we may receive, as well as our permitting. And that's why there's $1 million variance there. It's almost entirely due to the Villanova permitting payment. But everything else, as noted in the summary, was there's some doing better than others, but on the aggregate, it's in line. On the expense side, our general government group, which consists of the administration, finance, the elected treasurer, and our IT department, legal bills were higher than anticipated in the first 4 months, mostly due to litigation. Obviously, I can't go into a lot of detail other than to say that our litigation invoices every month runs anywhere from $12,000 to $15,000 in legal time, and that's unfortunately not something we have a lot of control over. But we have a couple large cases right now that we're incurring a lot of expense to. The other variance there is on the Labor Council side. As you're aware, we finalized negotiations with our 2 labor groups. So there was a significant amount of labor time associated with that. Those expenses will normalize moving forward because those projects are wrapped up. We're not using them for those services now. There were a couple other circumstances that were causing some higher bills. Civil service, we had some police promotions that were done. That always chews up some of the Labor Council time. So the expenses were higher in the first quarter, but they were specific to projects that are now complete. So we anticipate the Labor Council bills going back to normal, which is anywhere from around $12,000 a month, which is just coincidental that that's close to our litigation expense. The overage in IT is, if you'll recall, we had our finance server, the one that we're trying to get off of, crashed on us in January. So we incurred some expense with our third-party IT company who helped us get through that 2-week period of time. But since then, they've also been helping us to try to virtualize the data that's on that server so we can get the data onto the new servers. In the event that the server that's housing the old system does ultimately die. as you guys know, but again, for the benefit of the larger audience, when that server that data sits on dies, it's unreplaceable, which was part of the reason why we needed to move with the ERP as quickly as we needed to. I won't go into a lot of detail about how they're doing in virtualizing it. I will say that they've got the data over. They are having trouble replicating the operation side, getting it to actually work. The data's sitting there, but getting it to load and to operate is what they're struggling with and continue to work on. But that's the reason for the variance. Looking at protections to persons and property. Again, these groupings, the general government protections to persons and property, they're consistent with the groupings that you'll see in the CAFR. So we try to keep the categorization of revenue and expenses the same, whether we're talking about the audited numbers or these unaudited cash numbers. This includes community development, police, our contributions to the fire companies, as well as our EOC. As I noted, there have been no emergency operations center needs so far, which is good. So that line is 0. The other departments are showing positive variances to date. Public Works, this includes our building and grounds, our solid waste and recycling, our engineering, our highway division, and our mechanics. I'll jump to the middle row, engineering, and talk about the $215,000 variance there. That ties back to what I noted on earlier about the one-time catch-up payment to our third-party consulting company. The little variances in some of the other areas, the building and grounds, overtime associated with cleaning of this building. That's the result of an injury. So the person responsible for cleaning this building is out. In order to make sure we don't lose or fall behind on projects that Public Works would otherwise be doing, they've been authorized to come in and do overtime to clean this building. We've got permission from the commissioners to go out to RFP to hire a company to help with to take care of the cleaning of this building, and that'll resolve the overtime issue because the injured employee, when they return to work, will fill a current vacant role in another division. So at the end of the day, the township there's a net savings there, because instead of having 2 full-time staff, we'll have a third-party consultant, or not consultant, but third-party cleaning company, which will be less than what that full-time equivalent would be. Solid waste and recycling, we had a $15,000 repair in January with one of the older vehicles, and then so that immediately threw that department into a negative variance, because we don't anticipate needing those kind of repairs. So they're more of the replace tires, fix hoses. But when an entire transmission goes down, that'll create a variance. The good news is the fleet is getting younger, thanks to the Board of Commissioners adopting the more regular turnover of the vehicles and the capital leases. So the garbage truck fleet is getting younger, so those expenses should be more and more rare, but it's an evolutionary type of adjustment.
Hey, Bill, just
Yeah.
with the engineering expenses and the escrow thing coming up again, is there any way, or would it make sense to have that not run through the general fund and keep it out of the budget, particularly as we're about to do the new system? And not to create another fund, because that's the last thing we need, I guess.
Yes, yeah. We have those discussions regularly.
Okay.
So there's benefits and drawbacks to it. We just haven't gotten to a point yet where we've decided it's better off housed in its own fund. Because the primary reason for keeping it in the general fund is because the activity or the service that we are providing is consistent with all the other services that are housed in the general fund. So the only difference with the escrow activity is how it is funded, or the revenues that are generated to support that service. And so to pull that activity out into its own special fund, we really could do that with anything. We could take community development and put it on its own fund because it generates revenue that offsets the cost of the department. So instead of having inconsistencies on when we decide to pull something out of the general fund, we have elected to keep that activity in the general fund just to maintain that consistency.
Right, but would you adjust the budget if the activity is greater or less than you anticipated, being it, adjust the revenue anticipation and adjust the expenditure?
If we have information that tells us that that's going to happen, we could. As it stands, we kind of set a baseline for both revenues and expenses, and then we report on the variances.
Okay,
So.
okay.
On the Parks and Rec side, this includes not only our recreation and community programming, but also the park maintenance division of the Public Works Department. And I'll jump to that $107,000 variance because it circles back around on what I just commented about having vacant positions in that division, which is generating that positive variance. So we would anticipate filling one of those by moving an employee over. But the numbers are verifying that we're saving money on the payroll in that by having those vacant positions. The negative variances in the shade trees.
Bill, with
Yes.
the large park renovation program that's going on, those numbers are not flowing through here because they have their own grant that came through on a separate capital?
That's exactly right. When we have new money that we've borrowed for, part of what we promise the bondholders is that those funds will be segregated into their own sinking fund. So what we've established is a special library improvement fund and a park and trail improvement fund, which is housing the accounting for the capital improvements going on.
And that's where the grants and the bonds would go into?
Yep, exactly right. And okay, with the shade trees, we did a larger park project this year that cost $25,000. So normally what the shade tree cost center is used for is the removal of emergency removal of dangerous trees. So it's not usual that we would have a $25,000 project in one quarter, which is generating part of that variance. Normally what it is we have a few $1,000s consistently throughout the year, identifying dangerous trees and having them removed. So that particular cost center is ahead of where it would be budgeted. So in addition to the project that we had, we've also identified and had to remove more dangerous trees than what we normally would have expected with a $103,000 budget. The Sulpizio Gym, similar to the cleaning of this building, the same staff person was used to clean that building. So we're anticipating some higher costs there than what we had budgeted to keep that building clean. That is part of the same RFP that we're going out for. Then all other general fund expenditures, this includes our contributions to the various community organizations, the library, as well as our insurance and retiree cost center. And then the other, which just kind of jumps out, even though it's a very small amount, is when I put the budget together for this year, I'd left off the expenses we paid to the paying agents for all of our outstanding bonds. So that's why that $2,100 or $2,200 expense is a negative variance, and why the budget is zero. Normally that would be about $6,000, but for whatever reason, that was zeroed out and was not included in the budget. So we'll have a negative variance of about $6,000 for the year on that. The pardon me. The negative variance on the library is the result of some mold remediation that we had to have done We have since been reimbursed by insurance, so that variance has been taken care of. The community organization, what causes variance is there because the amounts that the board approves to contribute are fixed, so we would never generate a variance there, except for we have parking revenue sharing agreements. So the extent that the revenue from those parking lots are greater than or less than what we anticipate, it'll cause a variance on what we pay to those entities. So that's what's driving that variance there. I'm not sure what that graph
How are we
is
doing
for.
on time, Bill, in terms of?
Just wrapping up. So that's the end of the general fund. I'm actually pausing because I have a slide title here with no content. So I'm trying to remember why I put that in. But then the next fund in the agenda was the sewer fund. And this is part of the reason why we had asked the commissioners for a little bit more time in a special meeting to talk about this issue, is that for the last couple of years, water consumption has been down, and the township has elected to keep its the sewer rent rate the same for a number of years now. So in each of the last 3 years, we've had negative revenue variances. In 2017 so far is no different. We get, so to back up for just a second, the sewer rent is a component of water consumption times a rate set by our commissioners. On the expense side, the largest expense or the largest use of that revenue is paying for our contribution to the RHM Sewer Authority, which manages all of the downstream flow. Roughly $4 million a year, a little bit north of $4 million is what we pay them.
Does that amount vary by the level of water consumption?
Yes,
or-
so-
It does, okay.
When water consumption is down on the revenue side, we get a corresponding reduction in expense as well. However, the reduction in expense is never as great as the negative variance on the revenue side. So we have been eating into our sanitary sewer fund balance for a number of years now, and it's getting to the point where we need to adjust one way or another to keep that fund solvent moving forward.
I think I know where you're going with this and understand the necessity, the mathematical necessity. You okay? I wasn't even trying to make it funny.
You're getting me all choked up.
But it does seem ironic that if the citizens are using less water, we might ultimately boost the rate. One would think that using less water is kind of a good thing, but, you know,
That is definitely going to be part of the discussion, because you're right. Intuitively, you would like those two to correlate better. But the fact of the matter is that the ongoing repair and maintenance costs are not based on water consumption. They're based on the cost of personnel and equipment to provide those services. So unfortunately, those don't go down very often. And at the same time, the costs incurred by RHM are going up as well. So RHM is a stop along the line. I mean, ultimately, there is a larger treatment center further down the line that RHM is paying into, and those costs are skyrocketing. We have not seen those costs funnel through yet to the end users, which we would be basically, we're the smallest fish in the pond. We're the bottom of the barrel. And so ultimately, we're the ones left paying the bill. But we understand that with greater federal regulations on clean water, that greater restrictions and stipulations are being put on how dirty water is handled from the time it enters the system till it is treated at the end of the system. So the only way to do that properly is infrastructure, and infrastructure, like operating costs, does not flow or does not correlate with water consumption. It's a fixed price, and if we have to replace a line, we have to replace a line.
Can you comment on the overall quality of our infrastructure as far as the township is concerned?
Unfortunately, I cannot, other than to say in my 7 years of being here, we've had a handful of breaks that have required emergency repairs to the tune of $200,000 to $500,000 at a pop. But I do know that there are a couple of projects on the horizon. One is actually going through the Board of Commissioners now. That's the order of magnitude of millions for that project alone. That's why we want to have the discussion with the board to make sure that at the same time we're talking about doing the improvements, we're talking about keeping the fund solvent.
Thank you.
With stormwater, this was similar to the sanitary sewer fee. This is a fee that is this is based on impervious area for every parcel in the township. This is the again, my memory's going, third or fourth year of collections, and for each of those years, this is the fourth year, because we reported in the CAFR that was our third year. So this is the fourth year. Every single year we have met expectations on collections, which is another testament to the community. I know it's a very political topic, which I won't comment on, but in terms of the bill and folks paying it, it has operated exactly as we would have planned. And collection rates are very similar to the sanitary sewer, which are in the upper 90s, closer to 96%, versus the 99 plus on the real estate tax.
So you could say that the citizens are really stepping up and doing their part to
Yes.
fund activity.
Absolutely. Yes, no doubt about it. And being that not only was that fee new to the township, it's relatively, at the time, relatively new to Pennsylvania. Only a handful of communities had similar programs. So we really had no idea what to expect, and have been, again, I'm speaking strictly in terms of the accounting side of it, and it has performed exactly as we would have hoped. On the pension side, when I put this together, I did not have April's yet, April's numbers, so this really is the first quarter. In each of the 3 months, we had positive returns with a year-to-date return of 4.25, which definitely puts us on pace to meeting the 7.5. But as you guys know, and anyone who invests money know, that the first quarter really doesn't mean that you're going to meet your expectations by year end. All I could say is that with the first 3 quarters, they were all positive, which was good. And with this, I do these reconciliations, so I'm a little bit more into the numbers. I could say that for April and May, they were both months of positive returns. They weren't as great as what they were in January and February, but they were positive nonetheless. So we have moved year to date in the right direction through May.
Bill, the CAFR the draft CAFR that we just got recently, so that had pension returns for 2016, which I think were like about 6%, I think. Does that sound about right? Because I thought we were actually, I don't know if it's is it calculated any differently in the CAFR than it is from these reports?
I don't, I know that the GASB pronouncement gives the auditors the ability to use a different return rate. I don't think in our case they
Yeah, I
did.
mean-
They used the 7.5.
Yeah, no, I meant for but for the actual for 2016.
Oh, yeah, no, that
It came out slightly below the 7.5, I think. It was like about 6%, I think.
I'm sorry, Jerry, I'm drawing
Yeah.
a blank.
Okay.
And I'm not connected to the network right now, otherwise I could pull it up.
Yeah, that's what I was recalling. I just didn't know if there was actual market return or if that was some kind of actuarial adjustment to it.
In addition to following up on the Act 511, I will follow up on that as well.
Yeah, okay. And then I was wondering on this one, yeah, on this one, would it be possible to report not just the year-to-date, but to show like a 1-year return, a 3-year return, a 5-year return? I think
Oh, yeah.
maybe PFM provides that.
Yep.
So we could just show what those numbers are to get a feel for that. I think that'd be great to see.
Yeah, I'll just add those bars to the end.
Well, or even just the 3 numbers, you know.
Okay.
It doesn't need to be the bars, but just, you know, here's what our 1, 3, and 5-year returns have been.
Okay, yep, I can add
Or
that.
whatever, if it's not 1, 3, and 5, you know, not to calculate anything new, just whatever they're reporting.
I'm betting PFM probably has a snappy slide on that point. It's pretty standard in the business.
Yeah, we get them every quarter, so we have that readily available. We get it every month, I'm sorry. We get it every month.
Okay, thanks.
So that's the end of the presentation.
Well, thank you. Are there any further questions from the group? Okay. Well, Bob, did you? No? You guys both okay over there? I mean,
We're going to ask for permission to bring up something under new business.
okay. Well, again, thank you for this presentation. Look forward to the next one. So that concludes the Finance Quarterly Update. So the next item on the agenda is new business. So wondered if there was any new business from anyone on our committee.
Yeah, I can bring up one commentary that I think it's something that we should consider. I've been approached by several business owners in the downtown Wayne area expressing some concerns over the new parking kiosks. We've mentioned this in our group a little bit before about some confusion on the parking kiosks when they first were installed, some difficulties with the visual contrast on the screens and the use of the mobile app. But it seems as though this frustration and confusion is a little bit different. It relates to a few different things, mostly to business owners feeling that customers looking for a very quick stop-in. So these would be shops where someone's looking to pick up a cup of coffee early in the morning, order flowers to pick up, order sandwiches from one of the local delicatessens or delis, bakeries, and they are being turned away and going to other locations that have free parking because they feel as though there's no more 15-minute free parking option. And if they just pull in, they're required to go to the kiosk, pay for a period of time much longer than what they want, and there's a frustration, and that the meter individuals that are issuing the tickets are very aggressive and very fast to issue them tickets. It seems as though other townships in area, Lower Merion for one, has a 15-minute grace period on all of their meters for this. So the part that I'd bring it up is I would hate to see that our local business owners are losing business, which in turn we lose 511 tax money from, of course. And being the fact that the kiosks are computer-based, wouldn't there be some way for us to inquire about the ability, someone could park, move over to a kiosk, ask for a 15-minute grace period, be able to go in, frequent the store that they're looking to do so without being turned away? I don't believe that we would actually lose much revenue here. These people are not parking currently, so it's not as though they're lost revenue from from the meters, and they're being turned away from shopping in our stores, which I think is not what we're looking for downtown Wayne. You know, thinking outside the box, of course, these are the issues of small businesses, right? So we could always go out to an American Express or someone else who always wants to support small business and see if they would help us if there is a cost to implement this type program. But it seems to be a lot of it is a communication issue. You know, the signage, explaining if there is a 15-minute option, even as small as explaining the fact that it is my understanding that you don't need to replace the ticket actually back into your dashboard in your car once you go to the kiosk. That receipt you can take with you in your pocket because really the checking of the meter is all done digitally. It's not actually by looking in that slip. It just seems to be that the signage at these kiosks is poor, and our business owners are getting frustrated. And you know, I've heard stories of some of the older patrons, you know, being left in tears to never come back and are now down at the other shops further down Lancaster Avenue that have free parking.
Well, Carl, you know, with these new meters, you don't get any extra time. Like with the old fashioned, you know, if you put 50 cents in and only use a quarter's worth, the next person can drive up and, hey, there's money in the meter, I don't have to put any in, you know, if it's a quickie. That's not the way it is with these, right? How does that work?
Theoretically, it is the way that it is because, you know, the person checking the meter has no idea what vehicle really put the money in. It's just that you, as the person pulling into the spot, doesn't know if there's free money.
Okay.
So, you know, there is extra time. It's just unknowable to anyone who doesn't have access to the computer program. But I don't think that's necessarily the issue. I think the issue here is that we don't have any spots that are designated for the ability just to come in just for a 15-minute spot. Now, that being said, there are a few spots that do indicate 15-minute parking. I think there's two right in front of the area over by Wayne Sporting Goods. I think I've seen them a little bit further down. I forget what that store is. It's like a French bakery there. There's two spots there with a sign, but then it says register at kiosk. And you get to the kiosk and you have no idea what you're supposed to do except for pay money for a full hour. So I don't really know what those two spots are for. Just there doesn't seem to be very good signage there, and I hate to think that our individuals trying to frequent these stores are getting turned away.
Absolutely, I share that sentiment.
Further, I mean, I personally use the app, which is fantastic. Now, there is a surcharge on the app, which is currently being paid for by the individual parking the car. It's not being consumed by the township, and I think that's fine. But it's not really disclosed anywhere. We have signs everywhere that says, use our app, use our app. It does not say that there's an additional fee that is applied if you are using the app. I think that we should indicate that there is an additional fee if you are using the app.
Okay. Well, what shall we do with this? We happen to have a commissioner here who has heard the conversation, perhaps.
Well, one element is, since we've put these meters in, I'm not sure, have we opened it up discussion elements for the Wayne Business Association or the other business associations that are in the area, just to, I think it's really a communication issue, and I think the business owners need to understand how the meters work. They need to explain that to their patrons, and I think we can solve through a lot of this. Have we opened up the channels of communication between the township who's running it, you know, I don't know if that's the police department or the township that's installed them, and our business associations?
Okay. Bill, can you shed any insight into how that parking meter thing is managed? Is there someone, I have a dim recollection that there was some conversation and attempt to educate on these.
Yeah. So the parking enforcement is administered within the police department. My understanding in discussions with those individuals is that there is regular communication with the WBA, the Wayne Business Association, which may not encompass all the business owners in Wayne. So there may be a situation where they feel like, or I'll say we feel like we are communicating, but we're missing part of the population there. At the same time, we bring up a couple issues with the signage and the fact that there's no the end of parking benefit. There is actually a 10-minute free button that you can get. You can add 10 minutes of free parking to the end of every transaction. But I'm guessing that
That's
not everybody
that's
knows that.
Well, I think it's twofold. One, I don't think anyone knows that. Certainly, as I said, I use the app, and that's not anywhere noted in the app. And when I've used the kiosk, I don't see how that's even noted there. But this particular issue, which was brought by three stores that I frequent in Wayne, and they all happen to serve the same type of product. I'm a heavy coffee drinker, so they all happen to be in the coffee shop type vein. They're not looking for their consumers to add 10 minutes to the end. They're looking for an individual who simply wants to come into the store for 5 minutes to get a cup of coffee, to get a croissant, to pick up their sandwich that they've perhaps even ordered in advance. So they're looking for 10 free minutes to start, not 10 free minutes at the end. The ability to stop in, park, run in, get something, get back in the car, and move onward.
Yeah, this is a discussion that will touch lots of different groups.
Well, in my thinking, CARFAC is not a political entity in the typical sense. It's not our job to hold hearings or something like that, but I guess we could notify the board that we've heard this concern in the community and suggest that they move it forward if they think that's the appropriate thing to do. And of course, they could come back next year and say, we'd like to have CARFAC look at this from an analytical standpoint. But I think that's really our job would be to, if asked by the board, eventually do any analysis that made sense and recommend any alternatives that they might consider. But I don't know anything about it, but it certainly is, the business owners pay a substantial amount of tax, and if there is some easy solution, I can see where Carl would bring that forward, so thank you for doing that. I personally cannot appreciate all the other aspects of the conversation.
Yeah, I can, I'm only hesitating because I'm obligating somebody else, but if CARFAC wants, we can add this to a future agenda. We can have the folks who administer the parking attend a CARFAC meeting and just have a discussion about it. Ultimately, if there are ideas or suggestions that could get in front of those folks, they could take them and then make a presentation to the commissioners, and it could get some traction that way. I think that may be the way to go. So that way, the concerns that were raised here, we can have a discussion with the folks who are intimately aware of how this is administered. And if there are suggestions or ideas that we agree that we can move forward on discussing, we can do that.
Okay, so this would be kind of an expert witness, comes to visit CARFAC and answers some questions and so forth. We simply understand the issue from a more technical standpoint, and then at some appropriate moment, communicate with the board. I don't think there's a political problem with us having those conversations. That's not on our work
CARFAC,
list.
you guys are appointed to and respond to the board directly,
Right,
so that
exactly.
line of communication is yours to manage.
Right. Well, I'll talk to Elaine about that. And
Yeah.
just make sure, we want to be real clear and transparent with the board and work on projects that they've endorsed. There's several really great reasons for that. This isn't on our work list. That's the troublesome aspect from us being involved. But
To the extent that we are able to look into it further, would it be difficult for you, and with everything else going on, certainly don't put any further onus on you, but to look at a report of parking revenue and expense since the new kiosks has come on? I mean, the theory, I would assume, would be that revenue would go up and expenses would go down because we no longer need to manually capture the coinage and collect it and what have you. We can have the less meter folk on the street issuing citations and so on. So we could just look at a little revenue and expense forecast and actual, that would be helpful as well.
Let me talk with Amy Lacey, our revenue coordinator, and find out how difficult that'll be. And I can circle back on when we think we might be able to get that pulled together. I do appreciate the flexibility to give us a little bit of time, just with everything going on over the next month or so.
Also, and I'll get in touch with Elaine straight away to just get guidance from her in terms of any guidance she wants to offer on this for us. But if it's a matter of simply running a report, since it is a computerized system, you know, maybe it's just kind of a 3-minute job. That's, I think, what we're asking, not any kind of research or anything else. If it's
Yeah, I mean,
that,
I know for a fact, we have revenue by spot from the day those kiosks were installed. We've run some ad hoc reports, so we have nothing to compare it to prior other than aggregate totals, because we did not have that detail with the meters. But I do know that we can get to the revenue side, and the expense side for that matter, because we track that as well. So,
Okay, thank you. Anything else on that topic, Carl?
No, thank you.
All right, great. Any other new business to be entertained? Bob?
Yes, thank you. I just wanted to make the committee aware of Pennsylvania Senate Bill 653, which appears to be being fast-tracked through the legislature. In essence, the bill is proposing to consolidate the collection of the Act 511 taxes, specifically the business privilege and mercantile component of Act 511, and consolidate that to be collected at the county at the county level rather than at the municipal level. It's our understanding the township is a member of a Business Privilege and Mercantile Tax Collectors Association. We meet every year with a group of other municipalities all involved in collecting the same tax. This group has sent out a notice about 6 weeks ago and has been sending a couple updates, and most recently to let us know it's being fast-tracked. Our understanding is that the genesis is having to do with similar to 2008 when the state passed Act 32, which created one tax collector per county for earned income tax. And it was very successful because it was something that was much needed, and it certainly streamlined the collection of that type of payroll tax. Systems are in place for that to work if most efficiently with one tax collector per county. But with Act 511 taxes, these are an entirely different animal. It is a self-assessed, voluntary filing. There is no mechanism, as there is in the payroll tax world, to force and have regular collection for these types of taxes. And there is a lot of concern that by moving to a county-wide collection system, that the individual municipalities will eventually lose tax revenues because each municipality has their own taxing ordinance, their own enforcement, their own relationship with the businesses, our own methodology for auditing. It's a unique tax, and there is significant concern that if this bill were to pass, what the effect could be for Radnor Township on the Act 511 business privilege and mercantile taxes. So just wanted to make CARFAC aware. I expect there will be some communication. The board will become aware, the entire board, and this issue will be on Monday. They'll be made aware, and the administration, in discussions with our tax solicitor, we certainly are in opposition to the bill. So we wanted to make CARFAC aware. We'll make the board aware, and see what steps we can take in this process.
Thank you. You may not be able to answer this, but if they were to perform the collection function from our businesses rather than the way it's being done now, those revenues would still be identified with Radnor Township, and those revenues would be applied by given to Radnor Township to benefit our community, or would they be somehow shared with other communities? Is that aspect of it known?
Well, the senator who proposed the bill, it's his belief that this will increase revenue overall. But to answer your question, yes, the revenues that are collected on behalf of Radnor Township have to come back to Radnor Township. There's been no discussion or any talk of any kind of redistribution, but somewhere in the proposed bill, it's the belief that it would enhance revenue overall. And those of us who perform this function on a regular basis, there is no, we're not aware of what mechanisms are being included with this bill or any proposals to ensure that the revenue collection process continues the way it's been.
Well, we have a very well-documented and tested approach, which we've talked about at great length in other conversations. I could imagine that there are other communities that lack that level of sophistication and professionalism, and that might be helpful to them. But
For smaller communities, that may be true, but there are a handful of the 10% of municipalities who have this tax. A handful of us are right in this region, and this tax represents a significant portion of our budget.
absolutely.
So there is concern that if that process were to change, there could be an erosion in that tax base. Given the fact that each of our efforts are unique to the ordinance that we have to enforce, unique to the taxpayers who are in our municipalities, and just unique to the efforts that each municipality puts forth in identifying new taxpayers, in reviewing existing taxpayers' returns. It would be a lot for a single collector to, in my estimation, to effectively enforce the different types of ordinances for a group of municipalities in a particular county. So there is great concern for those of us who are at the top end of the collection for Act 511 taxes, and there has been a unified effort, and pretty much there is universal opposition to this bill at this point. So there's more to be learned, and there'll be committee hearings hopefully coming up that we can possibly attend and learn more about it.
Yes. Clearly, we would be interested in knowing about the financial impact of this, but I think another aspect of it would be how our taxpayers would be treated with this new collection service or approach. I mean, you know, it's hard to satisfy everyone, but I know that we make great effort to be of assistance, free service, you come on in, we'll help you, et cetera. I can't imagine in the moment that they'd be able to offer that same level of handholding, if you wish, and so on. And so, I don't know.
And I think equally important is the review, and if need be, the potential audit of a taxpayer's filings. They may do a wonderful job with you know, the administration and how they treat the taxpayers, but it is voluntary, and there is a level of review that has to occur. There is a level of oversight that is ongoing to ensure that we have full compliance. It is more incumbent upon the municipality to strive for full compliance because it can be very easy for a taxpayer to simply stop filing. And if we're not watching and we miss them, it is lost revenue in the process. So for a single tax collector at the county level to effectively oversee and enforce and follow up with each respective municipality, it's difficult to see how that can work effectively. We don't see that yet. So it's something that we're concerned about.
No, thank you very much.
Yeah, and just for my 2 cents, and we could spend a lot of time talking about this, and we may very well, depending on how it goes. But really, when it boils down to is that this is a local law that the folks who are elected here in Radnor have adopted. It's on the books, and it's unique to Radnor. And it's unique to each municipality that has it. So the administration and enforcement of those unique laws should remain with the same district that has them on their books. That is very different from the state income tax, where the only unique aspect to the municipalities is the rate they charge. The method of collection and how it's distributed is all set by law, state law. So it makes it a lot easier for one company to spread a web of collection over a large area when that just doesn't exist with local laws. And the disconnect that would occur between the law that's on the books here in Radnor with a third-party company managed by a group of folks in media opens the door for a lot of uncertainty, lack of service, and we've touched on a little bit. So I mean, at the end of the day, I don't see the logic or the benefit of taking a law that is expressly unique to that municipality and asking somebody else to come in and administer it. It just doesn't make any sense from an administrative perspective. So I don't get the benefit of expressing that Monday night. So thanks for giving me a couple seconds here tonight to say that.
Sure, thank you very much.
I just had a question about, does the township retain 100% of the Act 511 taxes now, or do they have to share it with the county or state?
No, every dollar collected in Radnor stays in Radnor. And on the enforcement and administration side, every dollar that is spent to enforce the law is also spent by Radnor. I mean, it's all within our borders, which is consistent with where the law exists, or the ordinance exists.
Okay, there being no further new business, do we have any old business to deal with? I'm not aware of any public participation. No public participation. Thank you for attending, Phil. Well, then I would entertain a motion to adjourn.
So moved.
Okay. I love doing that.